Hello investor and trader, welcome back to another video. In this video, it's going to be a continuous series of part 1 that I made I think over a month ago on how I catch a falling knife. So this is going to be part 2. In this video, I'll be more details, the little tiny detail that a lot of YouTubers don't talk about unless you buy the course or join the Discord, blah blah blah. For me, I don't like any of that stuff. I like to give free information and pass down my knowledge. Maybe it'll help you in your trades. I don't know, but for me, at least it works. So let's just roll the footage. Okay, so I normally trade blue chips, but this I'm pretty sure it's applied to penny stocks too. However, for penny stocks, you need to scale up a little bit in terms of percent drop. For blue chips like Facebook, Amazon, or Dollar Tree right here, example, $200 stock, to dip buy is when you're looking for ideally more than 4, 5, 6, 7% for a blue chip. For penny stocks, it could go 50, 60, 70% drop in a very short period of time, maybe less than 15 minutes or 20 minutes. The shorter the time frame, the better, because you want a short time frame. That means the bounce can be much higher. You don't want a stock that falls like this slowly. See? Almost a whole day is still falling. Now that you want to avoid, and I'll show you how to avoid that in a little bit. Okay, so I'm gonna start drawing examples, okay? So let's use red. So the first, no, maybe a little bit thicker. Right here, there we go. So the first candle could be a small red, doesn't matter, and then suddenly it just dropped pretty fast, right? And then it's not gonna drop like that. It's gonna drop up and down, up and down. This is how stock moves, right? Within that 5 minute. By the way, these are 5 minute candles. I prefer 5 minute. So let me just write that down right here, so that we all on the same page. 5 minute chart. Okay, there we go. And then the next candle, it could be red, green, doesn't matter. It's still falling, like this, right? That's how the stock moved during that 5 minute, and then it finished like somewhere like something like that. And then the next candle probably gonna be like down here, and you're gonna move up and down like this, right? Crazy move, and then it probably end up like that. And then the next one, probably something like this. Probably gonna be red. Let me go a little bit closer. Up and down, move like that, and then it's probably gonna close like right here. And then the last one, probably like that. Something like that. That was what I look for. So this right here, momentum is falling quick. So 1, 2, 3, 4, 5, 6, 7 candles. This is like half an hour already falling, and I would sit there and wait. That's why it's so important to be patient and have your clock up. I think I talked about my last video. Have your clock to look at the seconds, because each of these represent 5 minutes. You don't want to jump in too early, because sometimes jump in too early, it's just gonna fall in. It could potential take off some of your profits. So there could be a big wick. It doesn't matter. A small wick, big wick, a wick. Oop. Let's make that red. Let's be consistent. There we go. Okay. Wicks right here, it doesn't matter. I mean, you can draw the wicks in if you like. It doesn't really matter. It's not really important. Well, ideally, yeah, kind of. But what I'm looking for is the bar of the candle. So this right here is a pin bar, right? The candle right here is getting bigger and bigger, but here it's getting smaller and smaller and smaller. Selling pressure has decreased, and this whole 5 minute right here is a pin bar. Now the next candle I'm looking for, it could be green, it could be red, it could be any color. Ideally, what I'm looking for is a higher high and a higher low. So you're gonna start somewhere down here, and they're gonna move up and down like this as time goes on, right? And let's say it end up like that. That's fine. Now this is also known as a confirmation candle. As long as this high is higher than this high, this low, including the wick, is higher than this low. Or it could be something like this. Now sometimes the stock does this. For some people, they still, buy it right here. For some people, they don't, because this right here, let's say a dollar difference, because if this does happen, you kind of missed the trade in a way already, unless the next candle is higher than this one, because that's the ideal. Okay, this is the confirmation. But sometimes that does happen though. But ideally, I don't want it to be that big because sometimes when I see that, I'm like, oh man, I missed the trade. So I prefer the next candle to be something like this, not too big and not too small, just something like that. Now this could be a wick right here too. You want to draw a wick right here. Could be the same size, it doesn't matter. What matters is as long as this high is higher than this high, because I'm looking for a reversal signal. Now let's just draw some numbers for an example. So let's pretend this high is $100 or $200, doesn't matter. Well, we are talking about blue chips, so 200 bucks. Okay. This is a confirmation candle. The next candle I'm looking for is, of course, the green candle, right? Well, it doesn't matter what candle it is, but as long as the next candle, the higher high, is much higher than this high. So what I'm looking for is something like this. And I would enter, well, since it's a $200 stock, maybe 10 cents, 15 cents above the 200. If this is a penny stock, maybe a few pennies above it. It depends on the ratio, the scale of the stock. And of course, the wick could be right here. You want to draw the wicks in, kind of like that. Yeah. And then you ride the uptrend. Oops. Then you ride the uptrend until you move. The moving average will be something like this, right? And that's why you sell into a resistance. Or sometimes that's not going to happen. Sometimes it does this. Now this is why it's so important to buy above this high. Again, this is for experienced traders. If you're not experienced, I would recommend to buy above this price right here, because sometimes the stock does this, right? It opens and then it goes like that, up and down, and then it went like that. And then the next one be like this. And then boom. That can happen. Or something like this. Let's make it green, because that's something that can happen. Again, it's always you have to look out all these possibility, because in the stock market there's no guaranteed. So let's just draw right here, something like that, and then the next candle is gonna be red. And the next one gonna be red, and then boom. So let's say we enter right here 10 cents above, right here, and we entered, right? This is why you need to have a stop loss when you do these kind of trades. Or like again, it's all up to the individual. Usually a stop loss should be below this right here. It could be below this or below this right here. So let's just draw that. Just draw right here. You can have that stop loss or this stop loss. So the stop loss could be same thing, 10 cents, 15 cents below this. Just depend, because sometimes the stock's not gonna go the way you want it to go. This is known as a bull trap right here. It continues to the downside. So if that does happen, you have to cut your loss right here, because that's just part of the setup. Because there's no guarantee that this is gonna rebound. So always keep that in mind. So that is exactly what I look for when I make these trades. Is the whole idea is wait for these to finish forming and look for the reversal signal. And you go to Google right here. This is like an example. It's on Google. I mean, just search it up. Reversal right here, bullish candlestick patterns. The one I just went over is like this one, or even this one. Memorize this. Once you memorize this and you see it in live action, just apply it. What I recommend is you don't have to trade, full size. Know the entry, know the exit. That's all that matters. So this is go to our example right here. So for DG on today's movement, Notice there's a big red candle at the open, right? So these are 5-minute candle, and its stock is falling. This right here is a while doji. Ideally, I like doji like this right here, like small like this. I don't like doji like this. Notice the wick right here. It's too big. I would definitely wait for the next candle. Next one. Okay. This right here looks very attractive, right? I mean, is a green pin bar. Look kind of like this, right? Right there, kind of. It's not gonna be exact, but close enough, right? RSI is low. However, we need to wait for a confirmation, right? Because the confirmation is this right here. This is a confirmation right here. Or this is a confirmation right here too. Notice this high is higher than this high, right? This high is higher than this high. So we want this high right here. It tells you right here. So let's look at the price. It said 192.4 cents. I would enter 192 15 cents or 20 cents. Cents is $200 stock. 20 cents move is pretty easy for them. But that didn't happen because it kept on falling. Now, if you made an order right here, your order would not get triggered because you want to buy a higher high, right? You want to talk stock to reverse. You don't want stock to go down. So let's say you did that, it would save you this trade already because now it's a losing trade because it's going down. Now let's say you don't want to do that and you want to jump in right away on this candle right here. You want to jump in as soon as the almost 5-minute close. You want to jump in. Okay, if that does happen, and then the next candle you see this happen, you need to cut your loss. I'm sorry, but you have to cut your loss right here because the formation failed, right? You're looking for a higher high, but you got too excited and you jump in right on this candle. Next thing you know, it shows a red candle. Now you're not sure. You're gonna wait. Okay, I'm gonna wait for the next candle to see what can happen. At this time, now you're same thing. You're still in a losing trade, right? Now this candle happened. You need to cut your loss because it just keep on falling from here. RSI is low, but it could be low the entire day on the 5-minute chart. So RSI it helps, but it's not a confirmation. The candle formation is what you look for, the confirmation candle, right? So next thing you know, it just falls, 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 and falls. See this stock right here, you should cut your loss like somewhere right here before this happened, because this strategy is not a guaranteed. On top of that, notice the way it falls. These are small little candles, right? You want big candles, like this example. AbbVie. You want something like this. This is the ideal right here. So the stock is falling. Right here, it gets a lot of traders' attention already, especially for a blue chip from 111 all the way down to 105. That's a $6-7 drop. But notice this candle over here is a solid red. So we want to wait for the next candle to finish forming. Remember, these are 5-minute. RSI is low, but that doesn't mean jump in. Next candle. Now this is the big doji. Now if you are an experienced trader, you will probably jump in on 103 down here and you probably sell it somewhere here, $1 move or 50 cents move or 75 cents move. Now let's say you're a beginner and you're not so sure, you would wait for the whole 5-minute to finish forming just to see what kind of candle. Now this is a very bullish pin bar. Remember that we want to look for a higher high, right? Just like this right here. We want a higher high. So that does happen with a higher high. However, it opens here, it went up, then went all the way down here. So this is not ideal enter either because it's just a solid red, like no, this here also known as a confirmation. When it is finished, this does not look like a confirmation. It looks like a whole solid red candle. That means sellers are still heavy, although the RSI is like super low. Now here, it just take a break. I mean, it just, falls like crazy. Now it's the whole 5 minutes is not even moving. It's just taking a break. That doesn't mean it's a reversal or going back up. And another candle, and it still fall right here. Now at this point, you should know, okay, we are near the bottom because if you zoom out, that's why I like to use the daily also. Because these moving averages right here act as a support. Right? We near the $100 and the 98.99. So it already broke through the 103. So the next one is 100 or 101. You can see right here, it tapped 101. So right here is the bottom already. Now you're an experienced trader, you should know to enter right here, or at least near the 101 area. And then of course, this is the confirmation right here. And then there we go, we sell. Also we buy right here, and we sell up here. If you're a beginner, you will definitely gonna wait for this green candle to show up and buy 5 cents or 15 cents or 10 cents higher than this candle. So you pretty much you buy on this candle right here. On this candle. So where do you sell? You can sell right here to the previous high around 104, 105. Hey, that's like $2 move right there, 10 shares, 100 shares, 1,000 shares. Just depends how many shares you want to buy. But for practicing, I would probably buy like 10 shares or 5 shares or 1 share. To get the hang of it, over time, you get better at it as you practice. And that's it. That's a pretty good trade right there. So I'll give one more example where I have to cut my losses. So this is my old log, I call it. So let's give an example. Let's see. I want to show you guys buy one right here. So I made this trade back in September 4th, half a year ago. Oh no, not this one. Sorry about that. I think it's this one first. Okay. So on Wix, you can see right here the time and the date. 1,000 shares at 258, pretty much the half dollar at 258, right? So you can see right here, right? I'm waiting for the candle to fall, right? From 274, 72, all down to 265. That's like more than what? Excuse me. That's like almost $10 drop. That got my attention. So I would wait and wait. But notice the RSI is low, but not that low yet. These are 5-minute candle, by the way. Right there, 5-minute. Don't mind this chart. This isn't just another stock that I'll look at. But notice here, it's fall, but a small little green, right? So at that time, I thought this was the reversal. So I enter on this candle. You can see right there, right? I try to screenshot this because once you buy for Fidelity, this thing pop up and it slowly fade. So I try to screenshot this, but it didn't go the way I wanted to go. I thought it was gonna bounce. So let's minimize this and go to right here. See that? And that happens. That's why I had to cut my loss. You can see right there, right? Sell. I exit the whole entire position. So not like $1,000 lost, but it moved. This thing over here, it's kind of hard to explain, but you get the idea, right? Because when this happens, this low, I enter in this candle. Remember that. I know that. Okay, if it breaks below this low or this low, I need to get out because there are still more to the downside, which is kind of sucks, right? When you take $1,000 loss on your first trade for that day, and I did. I took a loss, but then this happens right here. If I can find the picture, right, I think right here. Yes, the second attempt. So I'll buy it again the second time. Okay, so I cut my loss right here, right? And then it just falls. Then I saw the green again. That one I decided to buy again right here. But again, I buy 1,000 shares. But sorry, I couldn't capture the instant moment when this message pop up. It showed 100, but it's actually 1,000 shares, and there's a time and stuff. So now I'm very sure. Okay, this is the bottom. Like I said, I wait for the green candle to shows up, but notice the minute right here. 7:49 is almost 7:50. It's almost a whole 5 minutes. So therefore, this confirmed this candle here is going to be green. There's no way it can be red because it's almost. I'm pretty sure the second is almost down to the second. That's why it's so important to have the clock up when you trade to make sure the whole 5 minute finish. Because sometimes it's green and you go back down and turn to red. So where did I sell this at? Let me see. Sell one, sell two. Let me see this one. Oh no, that's the first one. I think it's this one right here. Sell two. Oh, there we go. So I caught it right there, and I sold it right there. Now these are just a bunch of moving averages for me, like guidelines, but you get the idea, right? I mean, it went from 42 all the way to like almost 250. That's several dollars. 1,000 shares. Hey, that's several $1,000s right there. And that's it. You're done for the trade. So the whole idea is, when the stock doesn't, like I said, this strategy is not a guarantee. You have to catch a loss right here. Same thing for right here too. You see how it fall, green? Maybe you jump in right here, and then when the stock starts falling again, especially this red, you got to catch a loss right here. Especially, well, these two are gonna follow the same thing because from the Nasdaq. That's why I have these two up. Either take this trade or this trade the same. See the way they look, the same thing. Get both of these from the Nasdaq index. Okay, I hope that this helps how to catch a falling knife a little bit better. It takes take practice. Oh, here's another one before I go. Sorry, T-Doc. Let's go with this trade right here. I made this trade today on my small account. So it's only 10 shares. This is a small account. Again, I enter 1890, 183 right here near the pre-market low. Because pre-market low is also important too. There's a strategy for pre-market low. Well, for pre-market low, most of the time the stock likes to fall to the pre-market low, then it bounce. Sometimes it's just gonna break through it. When that does happen, you have to cut your loss, or don't size so heavy right here, right? Initial entry should always be something small, a quarter position or a half position, so that way you can dig yourself out. If you enter full position here and the stock falls, you're screwed. And you don't take a stop loss, you're definitely screwed. So I enter somewhere right here, right? The time is right there, 52. This is 11 o'clock, so right here, and I ride all the way to 191 to like right here because I see this right here. There's a lot of action going on right here, so that's why I decided to exit right there. That was a pretty good trade, although it's only 10 shares. Now, when you get more experience, you can always size up. It doesn't matter what's, you can buy 10 shares, you can buy 1 share, you can buy 100 shares, 10,000 shares. It doesn't matter. What matters is the entry and the exits. Once you have that over a long period of time of success rate, those consistent profits will pour in. The sky's the limit how much you can make in this thing. Okay, I guess I hope that helped. See you guys in the next video. Bye.